Hey everybody, it's Pete. Good morning. Welcome to today's episode of Stocks for Breakfast. We have a lot of talk today. We got the market looks like it's forming a bullish U-turn today. So in today's video, we're going to talk about potential reversals. We're going to talk about extremes in the major sectors and whether or not those extremes forecast potential reversals. We got this big chart that we're going to show you. And we're also going to show you the breakdown of how that works and the statistical analysis over that over the last 12 months. One of the members of our community is a real geek, I guess, for lack of a better way of putting it, where he really dives deep into the stats and loves to post them in the community. So I'm actually going to share that with you today. We're also going to go over something that I think is pretty interesting. You know that we're very big on statistical of what happens next, right? If this happens, then this happens. If this happens, then I plan to do this. I'm going to show you today the list that I compile every single day for our community and how those stocks meet the perfect criteria on that particular day. And we're going to go through that list, and we'll kind of do like a group session here where we're going to say, is it still a good idea, even though it was perfect maybe 3 or 4 days ago, maybe 2 weeks ago, and whether or not that meets your criteria today. So we got a lot to talk about. Obviously, Morgan Stanley earnings. Looks like Morgan Stanley earnings just came out, so we're actually going to hop right on over to that immediately, actually. But we're going to start out with, obviously, the disclaimer. Everything we talk about today is for educational purposes. It's up to you to make that final decision. So we're actually going to hop right over to Morgan Stanley right now. It looks like the earnings just came out early. It was up $1.40 just about a second ago. Now it's up 70 cents. So obviously, they're still digesting the news. Looks like earnings per share came in at $2.08, expected $2. So they beat by earnings per share just a little bit, and it's actually showing a ray of sunshine right now for what the markets have been doing. So you can actually see how bad the stock has gotten smashed over the last week and a half. Right now, it's actually holding the bid, which would be a pretty welcome sight considering how badly the market sold off on Goldman Sachs earnings and JP Morgan earnings. So if you remember just a couple of days ago when Citigroup and Wells Fargo reported last week, Citigroup actually opened lower, found buyers and came back. Wells Fargo actually opened higher pre-market and followed through. Both of them got dragged down a little bit this morning. So what's going to be very interesting is now Morgan Stanley's actually up $2 and change. If Morgan Stanley holds this bid heading into the market opening today, we will absolutely be looking to be a buyer of Morgan Stanley today. And more importantly, and this is where you work your way up the ladder of good ideas, is that because Citigroup already found buyers last week after earnings, and Wells Fargo, let's actually pull those charts up just so we get some full context here. And you can see right there was the day that earnings came out, and it actually rallied after. And yesterday kind of traded into a pause, but Wells Fargo as well. Wells Fargo was already strong and also paused. So it did not make new lower lows. So that means that they held the bid. This is a very important thing to remember. So I just want to go back to Morgan Stanley. So right out of the gate, Morgan Stanley now up $2.80. So now I have 3 financial stocks heading into today that are going to be on my radar. So that's definitely something to keep an eye on. But I want to just walk you through the statistics that we just talked about before. But before we do that, I want to go into the ES futures because, again, the process of what everybody should be doing at the end of every night is coming up with how do I look at the market at night, and then how do I make an adjustment in my game plan the next day. This is where trading becomes infinitely easier because you are knowing exactly what you plan to do well before it happens, right? So what we're forming right now in the market, if you remember last week, we're going to go to the SPY, and then we're going to come back to this, and we're going to go back to Morgan Stanley. Last week, we actually mentioned that, let me pull this out just a little bit, that if the SPY formed a lower high here after the bearish U-turn, so we had a bearish U-turn, we went well offered, and so far we followed through. Well offered, well offered, well offered, and yesterday closed on the low. What I'm about to show you, though, is this statistic and how this is playing into everything that we're going to talk about this morning. We're now seeing, let me pull in the 50 there, which is a big number. So we're well below the 50, right? So any short-term price action right now has to be viewed in the most immediate time frame, which means right now, whether we're swing trading or day trading, right now, because we've broken what has been the line in the sand, the basic area where buyers have stepped up, which is the 50-period moving average, we now need to lean on something else that might not have enough weight, but it has to be something that we're confident in. Last week, if you remember, we said if the SPY pulls back and the news does not remain positive and we start to see sellers come in, we actually said last week that 452 would be the level that we would expect it to push down to, because that's the last place twice that buyers came back in below the 50-period moving average. But what we're actually seeing this morning, and you can see here in the SPY, we pushed lower in the futures. And to give you an idea of where we found that support, we found that support right at that level. So right now, and I want to zoom this out so you can actually see it. Let me actually make it a little bit bigger for you. Right there is we are forming a bullish U-turn in the SPY, in the ES futures right now. So if you happen to be a new subscriber to our channel, or if you happen to be new to the channel, we're very big on making things structured. We're very big on making things repeatable so that no matter what you see, you kind of have your playbook that says, okay, if this happens, that means this, and that means I'm going to do that. Which, by the way, if you haven't already, please do me a favor, hit the subscribe button. And if you get value by the time we're done, do me a favor and hit that the like button. So bullish U-turn is a short-term reversal pattern. So I want to be clear. There's a difference between order flow, which is many people call the longer-term trend, and momentum. Momentum is the bar-by-bar analysis. So you might see a reversal and then what we call well bid. And I'll show you on the chart over here just to give you a full clarity on what I'm talking about. Okay? So right here is momentum. The individual candlesticks, that's momentum. This individual candlestick here, we call that a bullish U-turn. Now, I want to make a distinction between this reversal, which is still unfolding, and this reversal here. So you can see you had bearish momentum, individual candlesticks, and well offered. So this is well bid, which means higher highs and higher lows. That's significant from one candle to the next. Then you have well bid, well bid, well bid, right? Everything is awesome. So here's the point that I want to get across. If we zoom all the way out to that moment right there, every single one of us has moments where, like, okay, I got to make a decision on the price action right now. How do I know when something has changed in either the momentum or in the order flow? And in this case, we're looking at the momentum. We're looking at well bid, higher highs, higher lows, higher highs, higher lows. And that simply means that buyers, somebody with deep pockets, are holding the bid. So in other words, sellers came in and they say, no, we're not letting it go down to that level. And they have demand where they're paying higher prices, which is creating one day to the next, 1 week to the next, 1 month to the next, right? This is the foundation of order flow. However, we need to be watching that with the intent of saying, okay, it's still valid versus, oh, wait, something just changed. Now I need to sit up on my seat. And maybe now I need to make that distinction between reading the charts and making a trading decision. So we need to know now, what do I want to see versus what don't I want to see? So I'm actually going to walk you through this because it's kind of cool. It's actually unfolding in the market today. And this is going to allow us to script out the next couple of days. Today's Wednesday already, but based on what we're seeing early, we already talked about looking to buy financial stocks based on the fact that Morgan Stanley, and again, super early, this could change in 2 hours from now when the market opens, but this is the point of scripting. If Morgan Stanley holds the bid, if that happens, then we're going to look for Morgan Stanley, Wells Fargo, and Citigroup, because those were the ones that displayed some strength. But here's what I want to walk you through. We're actually going to do a little bit of a simulation, for lack of a better way of putting it, because it's going to tell us what to do today and the next 2 days if the market unfolds exactly as we're about to say in the opposite direction. I'm going to show you what I mean. So let's say, for argument's sake, let me just reset that chart. We are over here, and I'm going to make this a little bit bigger for you. So right there is what we're looking at. And I'm going to kind of go down on the side here so you can see it a little bit cleaner. So right there. So right there, we have well bid in the market, and the well bid support happens at the 50. It happened at the 50 again. So now we go into the next day. What do we want to see? What don't we want to see? Well, if we want to be a buyer, we want to see the next candle go well bid, the same as this, higher highs, higher lows, and best case scenario, we also close near the highs. Now, that's a big deal, what I just said. There's a couple of different pieces in there. Well bid means higher highs, higher lows. Better well bid also means that it closes in the top third of the trading range, preferably in the top 10%. So we're qualifying what good means, okay? And what we need to see next in order to stay with a good trade or make a different decision because the tape changed, because the momentum changed. Now we're going to tie that all the way back into what's going on right now and that bullish U-turn that we just saw in the S&P futures. So what we're going to do now is we're going to say, okay, what do we want to see? We want to see well bid again. Okay, fantastic. We got well bid again. What do we want to see? What don't we want to see? I want to see well bid again. Great. Not only did we see well bid, but now we need to pay attention that we just hit this wall of selling, that the last few times it got up here, sellers came in. What would be amazing would be another well bid candlestick through there. What do we not want to see at this level? We don't want to see indecision. A lot of people might know this as a doji candlestick, but we call it a melted candlestick. So let me just walk you through why we call it a melted candlestick. There's thousands of different ways to look at candlesticks. We've broken it down to what is the candle actually telling us, but more importantly, how does that translate into a trading idea? A melted candle, if you could think about it, that it's opened here, traded all the way up here, traded all the way down here, and then maybe opened and closed in basically the same spot. So there's a smaller body on that candle. That's indecision because 5 minutes could have went by, 6.5 hours could have went by, an entire day, an entire week. If it opens and closes near the same spot, the only thing we need to know is at that moment, there's indecision because all of that trading happened and we came to the same place. So that's what we're now looking to pay attention to. Do we remain well bid, or does indecision come in at the same place that sellers last time? Now, this sounds like we're looking backwards, right? We're not. This is what every trader should be doing, every trade that you're in. And it doesn't matter if you're holding a position trade for 3 months or a day trade for an hour. You need to be sitting at your seat. What do I want to see? What don't I want to see? So that when you need to make a decision, you know what you're going to do before. And I'm telling you, this is important because this is where all of that emotional stress in trading gets sucked right out of the equation because there's no stress anymore. You already know, what do I want to see? Great, still well bid. What do I want to see? Great, still well bid. What do I want to see? Wait, we're coming up to resistance. This is where sellers came in a few times. What kind of candle? I want to see an energy candlestick, large green and well bid, which is what we just described. But if I see a melted candle or a bearish U-turn, which is we trade up and reverse back down and close below the open, then I need to make a decision about the most recent momentum. Every single time we're trading, we have to have this going through our head. It sounds like a lot, but it's really not. What do I want to see? This is where traders get caught in bad trades. And I don't know why I keep doing this, but I want to explain this in the strongest way. Raise your hand if you've ever had a stop loss that got straight down, like a stock is coming down, goes right to your stop loss, and you're like, I'm just going to give it another nickel. I'm just going to give it another dollar. I'm just going to give it another day. You turned a reasonable loss into this gigantic loss simply because you didn't answer the question, what do I want to see, and what does that mean? What don't I want to see, and what does that mean? When you understand the simplicity of this coaching that I'm giving you right now, it changes everything because nothing is a surprise anymore. You're simply letting the most recent candle unfold, and then you know what you're going to do prior to that candle finishing. So now we just walk through all of that at the high here. And what do we want to see? What don't we want to see? We don't want to see a melted candle. We do want to see this in order for us to make that decision. Well, awesome, right? Continuing to hold the trade. So now raise your hand if there's been a moment where you've had a situation like, oh, I got out of that too soon. I had it. I had the big fish on the line and I got out too soon. You turned $2,000 into $1,000 because you got out too soon, simply because you weren't ready to make a decision. That's the big thing. It's not complicated. As a matter of fact, it's pretty simple, but you need to ask yourself the question, what do I want to see? What don't I want to see? And in both of those decisions, what does that mean I need to do? When you start adding that into your trading, everything becomes easier. So now we just broke out. This is a big question we actually had on our coaching call last night. In this particular window, we broke out. Real breakouts follow through. Real breakouts follow through with another big well-bid candlestick. That means buyers now are stepping up and we have clarity. So this candle just broke out. So now immediately we're saying to ourselves, this is awesome, but what do I want to see? What don't I want to see? And how does that translate into a decision? So now we're just talking about the most recent momentum. So we go back out to this chart. This looks great, right? We finally got through this level. Let me actually pull that up there just so you can see we finally got through that level. Everything looks perfect. And this is where you get in trouble. Everything looks great. I'm going to sit back. I'm just going to watch my profits roll in. I don't need to make a decision. Wrong. You need candle by candle, day by day, whatever time frame, 5-minute candle, daily candle, doesn't make a difference. You need to have an answer to, okay, that's great. What do I want to see happen next? We want to see well bid again. We want to see real breakouts follow through. So what happens next? Melted candle. So now immediately I have forever changed the way you look at candlesticks now, because it's either an energy candlestick or an indecision candlestick. Everything comes down to those two candlesticks. You either have clarity, where it opened down here and is closing up here near the high of the day, or maybe the opposite, opened up here and closed down here like we've had recently. Those are energy candlesticks. Somebody with deep pockets pushed it for that entire period. It could be 5 minutes if you're day trading, could be an hour, it could be one daily candlestick a week and a month. It doesn't matter. What matters is the objective that you plan for the trade. But now we punched up, and immediately you should be saying to yourself, that's not what I want to see. So if we're trading this most recent momentum and we see a melted candle, and by the way, this is actually a good question here. How do we identify a bullish U-turn is really not a bull flag? Let's actually answer that. A bullish U-turn is one candlestick. It's momentum. So Daniel, I don't know if you were on the beginning of the call, but I was very clear when we're talking about today's price action early in the futures. We're saying right now the daily candlestick is a bullish U-turn, and a bullish U-turn is a momentum reversal, not order flow reversal. So it's only one candlestick. What we just walked through is candle by candle by candle, because a lot of members of our community, and maybe here on YouTube as well, you want to capture the next move and then go to the next trade, capture the next move and go to the next trade. The easiest and quite frankly, the less stressful way to do it is we're looking at well bid, great. Well bid, great. Uh-oh, melted candle, something changed. Now I need to make a decision. Do I scale out? Do I get out? Do I move up my trailing profit? Generally speaking, I like to move it up to a point where I recognize the momentum has slowed down and book some of that profits if I'm only trading on that shorter time frame. If I'm trading on a bigger time frame for order flow, you have momentum within the context of order flow. So if you hear a lot about what we talk during the day, and pretty much every day, we talk about the average true move. We talk about the push and the pause. So what we just explained is one way of identifying when the push has indecision, and then we need to make a decision. What I'm walking you through right now is what we're about to see in the market and what's actually unfolding right now. This is where trading becomes kind of fun, because now you know exactly what is happening. The bearish momentum over the last 5 days, and I'm going to show you actually the email that we sent out last night. One of our members, Dilip, puts this in the community for us every day, and I want to share with you today because it's applicable to what we're looking at in the market right now. So the big thing I want to walk you through right now is what just happened here at this point is now forcing you to make a decision. And if you want, I'm going to make this bigger so you can take a screenshot of this, and I'm going to explain what the candle is as well. So looks good, right? What do I want to see? What do I want to see? What do I want to see? What don't I want to see? Now, this is a bearish U-turn because you traded through this candle and came back down. Not only did it trade that candle and come back down, but it also closed below the previous high and closed below the open. So what does that mean? That means that you're going to move your trailing stop loss, if it's a momentum trade, someplace where you're ready to book that profit. Now, what does this all have to do with this morning, right? Well, we're seeing, as of right now at 7:45 in the morning, a bullish U-turn in momentum on the S&P 500 futures. So now if this is the way the market opens today, now all of us now have what we're going to be saying to ourselves as the day unfolds and as Wednesday, Thursday, and Friday unfolds. What do I want to see, and how does that translate into a trade? So if we go bullish U-turn today, where we already traded through yesterday's low in the futures, came back, closed above the open today, and closed above Tuesday's low, and I'll show you what that means in a second if we take a snapshot, then we want to see well bid again. And as long as we go well bid, we can either day trade that momentum higher or look for swing trades back up to probably the 50-period moving average. So what's kind of cool about what we just talked about is that we just mapped out the next 3 days, 90 minutes before the market opened. That's where trading is now in your hands, and it has nothing to do with what happens in the market. Now, the other side of that is if the market goes bullish U-turn today, but ends up where sellers come back in and we close back below, that's okay. If this happens, well, it's not okay, but if this happens, then I plan to do this. If the market trades into a bullish U-turn, that means the short-term momentum has reversed to the upside after all of, and we'll show you this in a second, after all of these stocks hit extremes yesterday to the downside. And we're going to actually walk you through how that translates here, what Dilip just talked about. So what does that mean? Now we're going to work our way over to the SPY and work our way over to right now. So can you visualize now what we just did here with the buying and how these melted candles at this place that sellers came in? So we had melted candle, melted candle, melted candle, melted candle, melted. 5 days, 6 days of melted candles, indecision, reversing this to the downside. Melted candle, short-term reversal. Melted candle, short-term reversal. And now we have this bullish U-turn. This bullish U-turn right now, which traded below this candle, reversed back up, is as of this moment above the open of this candle and above the previous close. So what do we want to see now? We want to see well bid. That's one day. That's what we want to see today on Wednesday. Then we want to see well bid a second day. And that is probably going to end up being where the 50-period moving average comes in. And that's the short-term reversal that is on the table right now. And probably mostly because, let's take a look at Morgan Stanley and see how those earnings are still there. Still over $2. So still okay. So that's the way I'm looking at the market right now for today, Wednesday, Thursday, and maybe into Friday, with the 50-period moving average most likely being the first upside target. Now, remember, good question by Daniel before. We're only talking about the most recent momentum because the bigger picture has gotten a little bit ugly on the charts. And if we take a look at the SPY, we keep mentioning this every day, that the weekly chart is really what you need to look at to read the tape. And the tape has actually been pretty darn choppy. This is why a lot of traders have been getting their head beat in on the swing trade side of things. We've dramatically reduced our swing trades because, look, I mean, can you say that's obvious? Can you look at that? Since here, the last week of the first week of November, can you look at that chart and say, wow, buyers are really in charge over the last 8 weeks. I can't wait to join them. I can't wait to take my hard-earned money and put it on the line because buyers are doing something obvious. No, we can't say that. So how does that translate into position size? How does that translate into initial profit targets? Well, that means now we have to adjust to, if the market's not super obvious, we have to go and find opportunities within sectors. Then within those sectors, we have to go and say which of these groups within those sectors are finding viable opportunities. Recently for us, that has translated into energy stocks, basic material stocks, and for a little bit lesser known, basically industrial stocks. So we've been working our way away from a less than obvious market, a little bit more further away from technology stocks, and working our way over into those other sectors where buying is now following, right? We're going right into where the smart money is allocating money right now. So because the bigger picture in the market is a little bit less than obvious, and this was a big part of our coaching call last night, the big picture is a little bit less obvious. We're working our way up the power pyramid a little bit without that solid foundation of the market being obvious. And again, I want to point out what obvious means. We're talking about this. We're talking about this 5 weeks. So now this is a weekly chart before we told you a daily chart. So it's kind of fun right now is you should be able to spot it in a heartbeat. Well bid week, well bid week, well bid week. What do I want to see? What don't I want to see? Well bid week, melted candle, melted candle. So 2 weeks of indecision stopped 5 weeks of buying. So hopefully what we just did, if nothing else, we just really completely turned upside down how simple candlestick analysis is. And again, this is just charting. This is not trading. Charting is what to look at. Trading is understanding how to make money. They're two completely different skill sets. And that was also a big part of our coaching call last night. We actually have 2 coaching calls every week. That was a big part of it last week, was separating the fact that charting and trading are different skills. So what we're talking about now is analyzing the short-term momentum, admitting that the bigger picture order flow is a lot less clear than it has been, also admitting that the story behind why the bullish market was so roaring, for lack of a better way of putting, quantitative easing, interest rates at zero, that story is changing. So when we put all of these pieces together and I'll leave this on the screen here for a second. When we put all these pieces together, we have the bigger picture order flow, which is how long has smart money been buying, which you can see that here. Then you combine the big picture order flow with the most recent momentum, which is from 1 week to the next. Then you combine order flow with momentum with what do I want to see, what don't I want to see. Then we time our trades on the daily charts, and you have this really clean picture of, I know exactly what I'm looking at. Now I just need to, every single moment that I'm in a trade, what do I want to see, what don't I want to see. So if the SPY unfolds today, let me just pull that back up on the screen. If the SPY unfolds again the way that we were looking at, where we go, let me actually go over to the futures because that's where it is. If the SPY unfolds as we were looking for, where this bullish U-turn remains a bullish U-turn, trades higher. So then we're going to say, what do I want to see? What don't I want to see? I want to see this. I want to see well bid. I want to see well bid. As long as we continue to see this short-term reversal of the bullish U-turn, go to the next candle and go well bid and close on the high, that's how we could hold our trades. As long as we are seeing what we want to see, what we need to see, don't panic. Stay with the winner if you have it. But now you need to determine, am I trading momentum or am I looking for the next push and pause to build a new position? But you need time frames. Now, we just mentioned the 50-period moving average there before. That doesn't mean it's our ultimate target. It's our initial profit target to justify risk on this momentum trade, which could be 2, 3, 4 days back up to that level. Best case scenario, we start to reverse. Now, I want to show you what we posted. Let me just pull it up here. I want to show you today's email. I want to show you this. I want to pull it in here for you and give you an idea of what Dilip put in here yesterday. You might want to snapshot this because Dilip is a pretty smart dude. All right. So this is all based on what we're seeing right here. So Dilip, you can see that he's running this stat for a long, long time over sectors and whatnot. Okay. So here's what I found looking at the last 6 months of all the sectors red. So what he's talking about is here, and you can see energy kind of eked out its way positive, but pretty darn close, right? We've had 14 all red days on the 1 day sector performance in the past 16 months. So 14 times in the last 6 months, right? For the most part, again, statistics, good trading is about having an edge. It's not, this is definitely going to happen. What Dilip is saying there, which is what all good traders think, is I know what's probably going to happen, but what I'm definitely going to do, which gets us back to that equation of if this happens, then this. If this happens, then this. What do I want to see? What don't I want to see? So he's building an argument right now for a potential reversal today, and he wrote this yesterday. So I just want to be clear about that. Okay, so I want to walk you through the rest of it. For the most part, which means statistically, that's an edge. The market has bought the dip and all sectors were green the next day or within the next 2 days most of the time. So if you factor that analysis in to what we just talked about, this bullish U-turn and what we're looking to see over the next couple of days, we can reasonably start building a small position looking for this to move higher. So today would be the first piece. If tomorrow goes well bid, we can look to add, looking to go up to the 50. So let's continue to walk through what Dilip put in here. And by the way, Dilip, I don't know if you're watching the call. I want to thank you for this awesome stuff. We've had 3 cases, the 15th to 21st and the December of those months, where only the utilities were even or just slightly negative, but we'll count that as a win for the bulls. What I find interesting about the rebound on January 6th was that it was fairly muted bounce. So if we're talking about January 6th, let me pull this out. All right, where am I going? Right here. Right here, this one right here. So this is where all of them hit the same. Now, what's interesting is if you were looking at it right there and we hit the 50 you would have assumed that would have been support. So let's just walk through that again, right? Was fairly muted. Since we have more market headwinds, which is what we just talked about before, the conditions have changed a bit. Then in the second half of 2020, my bias, and we're going to talk about that word bias in a second, is leaning towards a higher open tomorrow, but a mixed bag tomorrow amongst sector performance, and probably not all sectors are green. Let's see how the day unfolds. And you can see some ideas that we're looking at for today as well. So the biggest thing I want to get across here, and if you want, I'm going to pull this down so you can snapshot this. So you can take a screenshot of this because I'm going to pull it up for you one more time. Okay. Right there. This is the biggest thing right here. My bias for the day. And let's see how it unfolds. Now, this is a big thing because when you're talking about going into the day, we just built all these arguments about potential ideas, right? If this happens, then we plan to do this. If this happens, then we plan to do this. There's a very big difference between my bias and what I expect to happen today versus my opinion, and I'm not willing to see anything else. What Dilip just talked about there is professional trading mindset, because the biggest trouble you will ever get in as a trader is saying, I'm right, the market's wrong, I have an opinion, and the market's got to do what my opinion thinks. But Dilip didn't say that. He said, for all of these reasons, that's why I think the market's going to rally tomorrow, and then we'll see how the market unfolds. If this happens, then I'll plan to do this. What do I want to see? What don't I want to see? So he said that's my bias for the day. What happens, maybe even after somebody watches this video, you'll say, but you said we were definitely going up tomorrow. That's not what we said. We built a script to be prepared for if the market goes bullish U-turn, well bid, we know how we're going to play it. If the market goes well bid and does not hold that bid, that changes and we reevaluate what we plan to do. So you need to think as a trader, if you've ever gotten in trouble where you've held on to a trade too long, where you blew a stop loss, where you kind of moved the stop loss just a little bit, that means you had an opinion as opposed to trading your edge. Your edge gives you that bias, and opinion kind of sometimes can give you blinders, and you end up holding on to good trades not long enough or bad trades too long. So just think about a lot of the stuff. You might want to watch this video once or twice because we came up with a lot of like trading maxims today that will help you really understand how professional traders think differently. And if I could give a theme to today's video, that's really what we're talking about, because professional traders do not force their will on the market. Especially if you have a lot of buying power, you can get in a lot of trouble with that. But if you have a bias in scenarios and then you trade your script, trading is really pretty simple. You already wrote down what you plan to do. Now it's just a question. If it unfolds, great, let's go get them. If you have a bias and a plan and it doesn't unfold, you're like, all right, didn't go to the next trade. And here's the thing that a lot of traders get hung up on. Be like, Pete, we scripted out 5 stocks. 4 of them did nothing that we planned for them to do. And I'd be like, awesome. 1 did exactly what you planned for them to do. I'm telling you this now, going into the market, into the day, into the week, and into the rest of your trading career. If you learn, like we teach, to script out what you plan to do, script out what you expect to happen based on building that argument and your bias, everything changes, because you only need one of those ideas to follow through. And who cares about, we had a couple of ideas this week where the setup was there and the stock did exactly the opposite of what looked like should happen next. So we're like, all right, who cares? We didn't even put the trade on. If you have X, Y, and Z needs to happen and that doesn't happen, you just leave it alone. You focus on the other ones that are doing exactly what you wanted them to do. That's real trading. And that's the difference between I'm a fantastic chart reader from I know how to make money. It's 2 different skills. And what we're talking about today is elevating yourself from I'm great at reading charts to I understand that making money is a different skill than finding a flag or whether you're using the right moving average. That's chart reading. Trading is what happens between entry and exit. There's no other way to put it. All right. I have to go. We got to get ready for our other game plan meeting. If you like what we saw today, please do me a favor, hit subscribe, smash that like button. And if you want to learn what we do in the boot camp, it's only a 30-day commitment. It's not a subscription at all. Click the link below in the video. I'd love to see you on the other side. Have an awesome day, everybody. I want you to know how much I appreciate that you're here with me. Thank you so much.